Fair. We mean the 51st state, right?
Yeah, you may move back.
All right. We are live. Welcome to Let's Talk Markets live on January 22nd, 2025. Welcome to Claudia and Ophir, our trusty macro markets team. It's great to have you on.
Great to be back.
Thanks, Dave. Great to be here.
Yeah. So, not much has been happening. The weather's been great, right? Everything is totally normal in the world. So let's see. Monday was inauguration, a day of record cold temperatures in DC, but the hottest market we've seen in a long time. So for 2 years in a row, 23 and 24, the S&P rose by more than 20%. And the last time that happened was 97 to 98, which, I don't think anything happened after that, right? And, we've got interest rate cuts coming, maybe. Record corporate profits. We're in the middle of a technology revolution. And so one would think we're poised for continued and growing prosperity as a nation. But Trump comes in and signs a ton of executive orders. So, I think what I'd really love to talk about with the two of you is, we're not, we probably all have personal feelings about various orders, but, to sort of think about it from a macroeconomic and markets perspective, what do these mean for markets? What does this second Trump administration mean for the economy? He had seemed to soften a bit on tariffs, and then I think I saw that he said he's putting a 25% tariff on Canada starting February 1st. So being up here in Canada, why don't we start there? I'm curious, Claudia, to start with you. I come from sort of a very classical economics educational background that says, you put a tariff on that flows straight through the consumer. And, that's going to raise prices. That's going to be inflationary. That's going to dampen demand. Is that still is that simplistic view of tariffs still consensus? Do you think it's accurate? Is there a bit more complexity here? Does it in fact help to spur domestic production and increase competition and such as maybe the populists would have you believe? What are your thoughts on it?
Well, I mean, first of all, the details of the tariffs do matter quite a bit. And these are early days, literally, of the Trump administration. And we have no guidance, even there were no executive orders on tariffs. There were offhand comments made by the president during the signing and since then. So we really don't have the details to make any kind of fine judgment. I would say broadly that the consensus among economists, though not necessarily economists of the Trump administration, is that consumers will tend to bear at least a large portion of those tariff costs, so that it's not that the foreign country is going to lower what they're making the importers pay, and then that's how the tariffs get paid, that it gets passed on to consumers. And I think we saw tariffs under President Trump, and that research, and there's a lot of it looking at those different tariff effects, they show this point about how much adjustment can be made. If importers can go and look for other source countries, then a lot of times those tariffs don't show up in terms of consumer prices because they can adjust. We're talking about a lot more broad-based tariffs this time, and there were cases of those, say, in 2018 with washing machines. There were studies that show that not only did consumers pay that pass through the tariff on the imported washing machines, but domestic washing machine producers also increased their prices on washing machines and on dryers, right? So this can have really complicated effects depending on the details. And so, this is a cost shock. And we know from the last 5 years that cost shocks, big broad-based ones like we saw from the pandemic, they can trace themselves out in very complicated and very slow ways. So there's, a lot at stake in terms of what this means for consumers and I think for businesses, but something is probably coming in terms of tariffs, but what that something is very much up in the air. And I think there'll be a lot of, back and forth and negotiating along the way.
Do you think that, there's been talk up here about retaliating? Obviously, like that's what a trade war is, right? Someone imposes tariffs, there's retaliation that comes, and it starts to go back and forth. I know Canada has spoken about putting that tariff right back on oil, which, the US is quite dependent on Canadian oil. Is that a practical thing for Canada to do? And if so, would that have a more dramatic impact on US consumer, the prices that consumers face across the board?
Yeah, trade war definitely makes this worse for US consumers. I mean, there's no question about that. And I think this is just where, especially there's going to be a lot of discussion about this, the Canada, the US, the Mexico. It's just the stakes are so high in terms of these 25% tariffs. It makes it hard to believe that we will see those in reality, but it will be very interesting to see what comes out of the negotiation that is decided to be worth this kind of saber rattling, because these just, a aspect of the US-Canada, US-Mexico discussions that is different than US-China tariffs, which I think are still much more likely to see something of that down the road, is that we do a lot of exporting also to Canada and Mexico, much more so than we do exporting to China. So really the stakes are so high. It's very attention grabbing. And I think that it makes it a big risk, but it's a little bit of like playing with fire. And it's less clear to me how, the fentanyl immigration, which are being used as kind of the quote unquote reasoning behind it, what that means. Although immigration is a huge piece of the kind of culture agenda that Trump has come into office with, and you see that in a lot of the other executive orders too. So it's but yeah, these are big stakes.
Yeah. What do you think, Ophir? How does this, what are the markets saying about this over the first couple of days? What's the reaction been there, and what does that tell us about how the markets see what's coming?
Markets have been reactive, but not conclusive. So we'll see bonds sell off and rates rise, and maybe it's because of tariffs, or maybe it's because of fiscal policy, or maybe it's because of trade policy, like we're talking about. Maybe it's because of social policy with immigration. And then it will come back down because, I don't know, there's a good non-farm payrolls number, or CPI is cooler than we thought it would be. And to really disaggregate everything that's moving the market is almost impossible. Everything Claudia said, of course, was right. If this is an across the board 25% tariff, I'm talking Mexico and Canada, then it's wildly inflationary. And if it turns into a trade war, it's even more inflationary. It hits at energy, hits at almost everything. It will hurt the economy because we export to these countries. These are our largest trading partners, as tends to be in the world. The countries you're next to are the countries you trade with the most.
Right.
So it could be wildly inflationary, and it could be a real hit to the economy. It would be a shame because, as I've said on this podcast many times, I said COVID was the irritant. The further we get from the irritant, the less irritated we are. Well, this would be a new irritant. Right? This isn't COVID anymore. And so they start all over. If the specificities of these tariffs are like really dialed in, and it's not so big. And I mean, like the classical theory around tariffs to get around them is like, are there substitution effects? Can you buy something else? Can you go somewhere else for it? Get another, right? Okay. So if it's really non-substitutable and it's really across the board, then it's a tariff. I wish the word wasn't tariff. It's just a tax. A tariff is a kind of tax. It's a tax. And that tax is borne by consumers. I don't know what will happen. Claudia brings up a very good point, which is that there in the communication, there appears to be a reason for them. Okay, like the border, or in particular fentanyl, but maybe that's not the reason. We don't really know. I think that Trump is going to be famous last words. I think Trump is going to be responsible because he takes great pleasure in the market going up. He takes great pleasure in the economy going up, and this would make the market go down and make the economy slow. And it would also make inflation come back, which would be a real shame. So I think maybe people felt that the market bottled the Fed. Maybe the market bottles the president. But We don't know.
And so what, I'm sure this is the question that you're wrangling with, and maybe you've been asked a bunch of times, but do you think that the Fed's orientation towards interest rate cuts is going to shift with this, if this kind of policy actually gets enacted? Will they forecast therefore more inflation and say now rate cuts are far less likely?
I think there is something that would cause the Fed to react. So then your next question is, what would that be? And I don't know. But there is some action on tariffs, some trade policy, which is egregious enough or abrupt enough or whatever adjective you want to use, is meaningful enough that the Fed would react. The Fed would rather not react and rather not talk about that. But yes, the Federal Reserve, the purview of the Federal Reserve is price stability in the labor market. So if there's something that's obviously going to cause price instability, yes, the Fed will act.
And Claudia, do you think the Fed will need to see the effects before signaling a shift, or would the mere policy be enough to get something out of the Fed to say, could the Fed actually act as a counter? If Trump knew they weren't going to cut, maybe it would shift his thinking to a certain degree.
I would be surprised if the Fed is shifting its thinking, like in these first few days, and like as the announcements and changing probabilities of what would happen. I think you first need to see a announcement of the tariffs. One thing that's tricky about the tariffs is this seems to be a policy tool that President Trump is very enamored with. In lots of different situations, tariffs come up as we'll put a tariff on them, right? So this is not going to be the one tariff for the whole year is announced next Wednesday and we have clarity and we can plan. This is going to be kind of a rolling irritant that for the Fed. And so I think they're going to be looking for the policies. Again, once you have details on the policies, that gives you some sense of the substitutability. What are we talking about? What should we be watching? If the effects on prices can be traced out fairly cleanly, like we don't get in a trade where we don't have this every week, there's a new tariff, well, then the Fed what they want to make sure is that inflation doesn't pick up again in a sustained way. Right. They missed the call with there were all the pandemic related inflationary forces, and they proved to be more persistent. Right. And that embedded them. And there was spread. Right. And so that you don't want that to happen, because once inflation gets there, it can become embedded. Right. So if the Fed can say, well, there's these tariffs are adjusting, it's about a price level. It doesn't necessarily have to be inflation in the sense that it keeps going up and up and up. But if they can relatively clean look at it in the data and say, oh, those are tariffs, we don't need to react to that. We can make a strong case that says this is temporary and interest rates shouldn't be like moved around, for these temporary things. But, a lot of everything else is going on in the world too. It's not like forecasting inflation is going to be easy this year or picking apart why it's happening. But the tariffs create this extra bit of uncertainty. And frankly, they can create some uncertainty even ahead of the tariffs. I mean, we've seen in survey after survey that a very common response of households to the discussion of the tariffs is, well, maybe I should buy my stuff ahead of time, or businesses, maybe I'm going to import the goods ahead of time. Holding inventories is not cheap, right? So you could even be creating some inflation early in the year when we're trying to figure out was last year's inflation just, fluky and now it's slowing down. So it
and pulling demand forward in strange
ways.
Demands
forward. Because again, what the Fed is all about right now is are we sustainably going and staying to 2% inflation? And that is going to be a very hard, even harder to judge than the past. So what does the Fed do to the extent that they think they can with the other side of their mandate? If the economy holds up, they just dig their heels in and wait.
So. Well, there was also, as we're talking about executive orders, a very interesting one to deliver emergency price relief for American families and defeat the cost of living crisis. So the Fed doesn't have to worry about inflation because the executive order is all over it, right?
That's all it took, man.
Why didn't Biden do that?
I don't know.
Come on.
It just was an executive order. That's it. I mean, we can all do it ourselves. I declare that there's no inflation.
No inflation. It's done. So, I mean, we're making fun of it, and obviously that kind of executive order has absolutely no detail behind it whatsoever. Is there anything that you can think of that actually that might be a part of that could actually deliver some level of relief?
At the executive order level?
Yeah.
Well,
I can't, but maybe
I mean,
you guys.
if you really had to, like, gun to head, you could. Oil production in the United States.
Yeah. Okay. Yeah.
You know, that there's a little bit of a boomerang effect when oil prices go too low, then
Right.
producers
Shale
leave the
producers.
market, right?
Yeah.
But if you really want to be like, okay, gun to head, is that possible? Hypothetically, yes. Right? He has
Yes.
spoken about increasing, substantially increasing oil production in the United States. That would hypothetically lower oil prices unless OPEC reacts. Right? There's always follow on.
Yep.
But okay,
And
yes, hypothetically, yes.
right. And so that was another one. There was another executive order where they have unleashed American energy, despite I think drilling being at an all-time high as it is right now. But now
Actually,
it's been
the
unleashed.
U.S. produced more oil than any country ever in several months last year. Several individual months were the most oil produced ever by any country ever.
Right.
So
right. But now it's been unleashed.
Now it's unleashed. Yes. Now it's going to be even more than ever.
Yeah.
Ever. Yeah.
More than ever. Yeah. But you know, back to your points, both of you made about how he uses tariffs in a way that, you know, just because it's maybe his favorite policy, he did tie TikTok to the Chinese tariffs, which are two completely unrelated things. But he said, you know, if China doesn't make a deal on TikTok, that's going to be part of a driving factor of putting tariffs on China. And in fact, that I thought the reaction that I got from, you know, some of the people on the right that I read, the sort of right populists, they were upset about that because they view tariffs as a reasonable tool in a broad sort of economic policy approach. And you know, they were sort of up in arms. This has nothing to do with that. Why confuse? Why muddle the message? If you're trying to truly put a populist economic policy in place, you know, and now suddenly he wants the government to own half of TikTok, that you couldn't sort of go more against kind of the what the right wing, even you know, even the right wing populists stand for.
I mean, in fairness, I don't think the left wing wants the government to own TikTok either. But
yeah, probably not, right? Yeah.
No. But this hasn't made the tariff discussion difficult in that the original purpose usually is an industrial policy, and you could have, you know, a discussion that President Trump wants to switch to using tariffs for industrial policy tool, as opposed to Biden did more. There were more direct investments. There were also tariffs, but there were a lot, you know, direct investments in U.S. industry. Okay, so like that's a discussion of tariffs. The thing that makes me very uncomfortable with tariffs is how it's gotten pulled into the how are we going to pay for the tax cut extensions. Every time the President Trump talks about the tariffs as a revenue raising tool, it just makes my skin crawl, because then those are like, you know, to get $2 trillion worth of tariffs, that's a lot of tariff revenue. So like, wow. and then to have them show up in a discussion like TikTok, where we're going to use this as the force. So it's fascinating. There is definite disconnect between, I think, who you'd think of as mainstream traditional supporters of tariffs, and that's a relatively narrow group, but then the way that President Trump seems to think of them, and again, clearly some of his advisors. So it makes it hard to kind of think about where this is headed in terms of what would actually happen, as opposed to just this is going to be the tool that is used for all negotiations, regardless.
You know, I wonder, since we've been talking about it, it just occurred to me, I wonder what you guys think. Do you think it's possible that he uses the threat of tariffs too much and they stop working? The threat stops working? In other words, if it's used as a sort of hammer to, you know, everything's a nail, so, you know, do you think that's possible? It just occurred to me as Claudia was talking. It's like, wait a second, if he's going to use it for TikTok and things, and maybe the efficacy of this threat, which is very real now, because he did raise tariffs before, maybe it goes away.
I had thought that the Mexican and Canadian tariff threat was posturing, and he got Mexico to, sort of make some superficial representations about the border, and Canada did something similar. And I had thought he was going to then walk away with that as a win and claim victory without taking the risk that I think would be associated with tariffs on the US's largest trading partners. And I'm surprised that, he's come out and at least on the Canadian side said that they're still coming. And I think, Claudia, you're right. The devil will be in the detail, but maybe he sees that risk too, Ophir, that the threat, unless he actually does it in a way that he's willing to sort of cut off his, nose to spite his face. So either he doesn't quite see the potential economic impacts of those kinds of tariffs on Canada and Mexico, and he thinks of Canada as, sort of the small country that really won't impact the US much, or he recognizes that there's a risk that it won't be effective as a threat. I would have thought that he would, if that was the case, that the Chinese tariffs would have made far more sense in terms of sort of backing up the threat and continuing to have it have power, because I feel like that would be less economically painful in the US to something like Canada and Mexico, which again, like if he does this and it really is as inflationary as we think it will be, and it results in the Fed not cutting rates and maybe even raising them in the face of more inflation, that's an economic disaster for him, and that he will own. And that will be extremely problematic this year and next. And I'd be surprised if he'd be willing to take that on. But what do I know?
Fair. Yeah.
Anything else about the executive orders, that kind of jump out at you, and anything that you think is worth focusing on in terms of the economic impact?
Well, immigration. I don't think that the executive. Okay, so I'll need correction here. I know the executive order, there are many executive orders surrounding the idea of immigration or limiting immigration. I know there was this birth thing.
Birthright citizenship.
Yeah, but were any of the executive orders that were signed, did they in fact place into action deportations right now?
So I not that I have seen outside of the birthright citizenship.
Yeah.
Given that it could potentially result in the deportation of it's not 100% clear that it would exactly, like, that it's narrowly tailored enough, and it could result in like children of visa holders who are in the US legally still not getting citizenship. I think that was one of the issues, and could result in deportation of people like that. But no, there's nothing that I saw that sort of enacts the deportation force.
Okay,
right?
So I think
that's
a big domestic policy or social policy of deportations. Now we're talking about a totally different kind of inflation, and tariffs could be, I don't know, 7 out of 10 bad, and mass deportations gone wrong could be 11 out of 10 bad. So if you're asking if there's something else, then that would be the something else that makes tariffs look small, in my opinion.
Mm-hmm.
But there were aspects of the executive orders that, not on deportation, but on furthering the restrictions at the border for in-migration, so to limit immigration into the country. And I think that's something, just to underscore what you're saying of here, is that like the last 3 years, we had this historic levels of immigration into the country, and that was disruptive in many ways, but it also was essential to dealing with the labor shortages that had been really plaguing labor markets and pushing up wages and inflation, and like we're not a sustainable thing. And so even going from, and it's been hard for it to show up in all of our standard labor statistics, what this is actually doing in terms of the labor force and what it boot, but you can just kind of see in terms of wage growth moderating, getting to something more sustainable. growth just in general has been very positive. And so we don't, mass deportations would throw immigration in reverse. It would have massive negative net out migration, but just having the immigration slow fairly suddenly can have effects on the labor markets as well, because it's been a real boost to the I think in particular, like I don't expect us to see the kind of overall growth, like GDP growth, that we've seen in the last few years this year. That doesn't necessarily seem we're like crashing through the floor, but it does mean something if you're going from a growing labor force to a slowing labor force. And immigration not only was helping in recent years in an outsized way, but it's been important in terms of pushing back on demographics with an aging workforce. So I think it's one that we could have some pretty noticeable effects this year, but it sets us on a trajectory longer run that's pretty problematic for broader. Like we need a good labor force, and this could stand in the way of that.
We do. That's right. Unfortunately, what I think is coming in 2026 means that will be solved too in a bad way, and it's not because of politics. So,
what do you mean by that?
I mean, we're gonna start feeling the real effects of AI by the end of this year. It'll be obvious, I think, and then into 2026. Yeah, there will be. People are. I mean, some Mark Benioff and Mark Zuckerberg. Some people are talking about it, but.
So okay. That's interesting. You're buying this. I've seen what's been going on from OpenAI and them teasing that, oh my God, everything is about to change, and I just assumed that they were in the middle of a fundraise. You don't think that? You think that there's a real shift coming?
If we're not on UBI in 5 years, then I'll be shocked. I just want you guys to remember that there are discussions that they just go way too far. So like, we're going to lose every lawyer in America. No. We're going to lose every developer in America. No. But if you lose 1 out of every 5, that's mass unemployment. Just 1 in 5. And I don't think we're going to lose 1 in 5. I think we're going to lose more than 1 in 5. Same thing goes for consumption-based software. A lot of software, as it moves to the cloud, as it migrates to the cloud, they realize they didn't want to charge per seat, which is just like, I have one and you have one and Claudia has one, and so we pay for 3. And they realize, oh, that's not good because people are becoming more productive. We'll charge for consumption, which makes sense. Well, here's the boomerang for consumption-based. I'm going to replace parts of very expensive enterprise software with smaller pieces, but the rule that we 80% of people use 20% of software. It's not really true. It's 95% of people use 5% of software. That's actually the rule. And I'm just gonna, I'm speaking sort of the royal I, people will take the 5% of the software that they use, build it themselves internally. They're not going to cancel their other subscriptions just in case something goes wrong, but it's consumption based. It's going to be like a leaky boat. I think consumption will go down more than 50%, but even if consumption goes down 1.5%, that's a catastrophe in technology. A catastrophe, right? That's like losing 1 in 5 lawyers or 1 in 5 developers. You don't have to lose all developers and all lawyers. You don't have to cancel all software, right? Losing 15% of consumption because I'm doing it myself, or losing 1 developer job for every 5 that used to be out there or that are currently working is a disaster. And that it's coming for everything. And you say, well, okay, well, you doing it in your company? Yes, I did it in my company. Yes, there's 1 person fewer working at my company, 100% because AI replaced the job. 100%. Not kind of, not sort of, not a little bit. 100%. AI does the job better. AI never sleeps, doesn't really make mistakes, and costs 0. It'll cost $200 a month. In fairness, it's O1 Pro. No insurance. Sorry, that's just how it's going to have to be. And that's how it's going for code deployment, code development. I've created more code just myself in the last 3 months. Yeah, I would say it's at least 3 years of work, but it's not really 3 years.
I'm totally in agreement with that part. Like, I have not been developing software for a while until recently, because now it's so easy. And now I have like a junior coder at my fingertips who responds instantly with high quality code.
O1 Pro with the right prompting and having several windows open is better than a junior developer. It's not yet a senior developer, but it's a $230,000 employee. But the thing is, every tab I open is a $230,000 employee. There's no limit. I can have as many tabs open as I want. And so I think I don't think we're gonna have to worry about wage inflation for very long. And also like in the artistic world, like, oh my God, it's a disaster. Like, oh my God, if you just look at what's coming in the art world, it's like, oh no. So yeah, I think that is going to play a part of what's going to happen. And then we're talking about the next 4 years. We're talking about this year, but like the next 4 years, if we're talking about a presidential administration.
No, and he was excited to announce, the $500 billion going into AI, right?
Mm-hmm.
And so, yeah, but okay. So this is a pretty fascinating conversation. And again, if you read sort of the classical economic take from both sides that I've seen, they will say this is another productivity enhancer, and like all throughout history,
nope.
It's going to displace some jobs, and there's going to create others.
It's a too myopic view of what happened. Every productivity increase we had, pardon me, I'll take a step back. Every step change we took in technology was productivity increasing because with the use of humans, it allowed things. The printing press. It allowed for the printing of things rather than scribes, right? Printing press. Transistors developed into computers, right? The printing press never wrote something on its own. A transistor never made its own computer. AI, in particular agentic AI, it thinks for itself and does its own work. Because it exists, things that a human would have to do, that human doesn't have to exist. That's very different. Of course, there's a productivity increase when we were writing things on paper as many times as we could. And then a printing press came along. And of course, there's a productivity increase when the telephone, where we didn't have to send letters, right? It's like, oh, I'm going to take a carriage. Or when the automobile, right? What did Henry Ford say? If I asked people what they want, they'd say faster horses. They didn't want faster horses. They wanted an automobile. Yeah, but that's not what this is. This is the first time, I think this is the first time in human history where a technology will actually work on its own. That's it. And that is a completely different point of view than a productivity increase. It will be a productivity increase because people we pay a salary we will not need. It will not create more jobs. It will create.
Claudia, what do you think? Is this time different?
I can see the argument. I still am more in the camp of this being a general purpose technology, which is a big deal. Like these don't come around often, right? AI has the potential to be a real game changer. I still see them as augmenting, but to Ophir's point, like we are still talking about the ability to replace many individuals who are currently in those positions. And we also know from history that process of retraining or that's more like across generations as opposed to across years, right? So there is a real disruption and there will be real pain from it. So I hear you on that. I'm not quite as, I think we'll find ways to, have it be labor augmenting and not just replacing, but the balance on this one may be particular, and in certain areas and industries may be very much in the space of replacing large groups. And we've seen, we're coming out of a period where this has been a really dislocated labor market, and we've seen lots of job switching. We've seen there's some evidence that there's even shifts in like occupational like the shares of the workforce. So we've seen a really dynamic workforce in recent years by force. Like the pandemic caused this. So, and I think we maybe are getting a little bit of a breather right now, and we're poised for that to take off again. So yeah, no, it's a big deal. I'm not quite as pessimistic, but I have, but
Pessimistic on the result or optimistic on the technology. I think 2025, everything will seem like it's the greatest productivity gain we could have imagined. And everyone will say, see, it's productivity. That's what so I'll tell you that much. I think that's what 2025 will feel like. But by October of this year, you'll see the cracks. I think we're already seeing the cracks, but nobody wants to talk about it. I think by October, will actually be like, it'll be cracks that you can't ignore. That's my guess.
But this, I mean, for now, at least in the near term, I would probably say this is strictly in like sort of the knowledge worker part of the economy, right? This, you know, we're not talking right about robotics yet.
That's right.
I mean, robotics, I think, that's sort of another piece, and maybe that's where it gets a little scarier, because if you combine the two technologies and they advance as fast as some people are talking about, you are on the precipice of displacing all sorts of other jobs. So, you know, for example, Boston Dynamics has been very vocal, and others, about their warehouse technology and how good their warehouse robots are at unloading and loading and sorting and all of that. You know, right now, Amazon and Walmart, just massive employers, and that level of employment is probably not terribly threatened until robotics reaches a certain next level.
Yeah,
it's hard to imagine it's not coming at some point.
Yes, but that's not what I'm talking about. So I think the safest job in America right now is to be a plumber, for example. No, I mean, sorry, ChatGPT. Well, I suppose ChatGPT could help you try to fix it. Let's just take out that use case.
Yeah, YouTube's pretty good at that too. It hasn't.
Fine. Let's just take that out, right? That exists. Okay, you're going to need the pipes fixed, right? Or an electrician, or a builder, a general contractor. So I'm agreeing with you. Having said that, here's the discombobulation that happens before the robots. Okay. Let's say I'm right that 1 in 5 knowledge workers don't have a job anymore. Okay? Not all. I didn't say all. How about 1 in 10? 1 in 10. Okay. They still have families and have to pay the bills. And they're like, you know what? Plumbers are doing pretty well. Well, then what happens? Well, then you get people with Harvard PhDs, just hyperbole now, who are like, well, I got to be a plumber. Okay, well, then what happens to current day plumbers? You're only safe.
They've all been rolled up by private equity, so.
That's true. You're only safe. You're only safe for so long. But yeah, I think being a plumber right now it's pretty good for the next few years. I'm actually not kidding. It's pretty good for the next few years, and I don't think they're going to get displaced in the short term. So I am talking about the knowledge worker. Yes, I think there's a great irony to this too. That it's the higher, really? I mean, like the higher paying jobs are the ones that are at risk, right? And so all of a sudden it's going to be urgent. It's like, but ultimately in the long term, well, then the higher paying people are going to have to. They still have to pay for their mortgage and children, and you know, what Goldman Sachs. I'm seeing a comment. Yeah, Goldman Sachs CEO says AI can draft 95% of an IPO prospectus. I'm not going to tell you what AI can do because we're using it. I'm just letting you know that someone once told me, this was a long time ago, and I'm just going to leave this out there. Someone said, I need you to think outside the box. You know, and you should try to. And then someone told me after they heard that, they said, they're not going to get it. And I said, why? You don't think they can think outside the box? They said, no. Thinking outside the box is still living inside the box. Right. It was very Matrix-ish, and there was no Matrix yet. There is no box. People are way too limited in what they think this can do. If they stop thinking about the way things are, if they stop thinking about a faster horse and start allowing for the possibility that there's a car, that's where the job losses come. And it ain't going to take that long because it's happening slowly in companies. It's happening quickly in mine, but in other companies, I'm talking to other companies and they're like, yep, we got it. They're like, it took us a while to get there, but yep, we got it. That's where the disruption comes. There is no box. It's not outside the box. There is no box.
So Claudia, I'm interested in your thoughts from an economic perspective, because earlier Ophir said if we don't have UBI, if we don't have universal basic income in the next 5 years, it's going to lead to serious problems. That doesn't seem like something that is even in the realm of possibility in this administration, but let alone just generally in the United States. That's really never been.
The House rolls over every 2 years, Dave.
Yeah.
Right.
Yeah,
And I
fair.
just say what Ophir is sketching out would be a massive fundamental disruption. Right. Policy does rise to a crisis. And things are so if that is the path that AI goes down in terms of how it affects workers, I mean, I think universal basic income is, I mean, that's a policy that has been discussed and tied to that exact scenario for some time.
Right.
I don't think there's as much weight put on that scenario, and that may be for not everyone is as exposed to what this technology can do right now. So I think, depending on where you at in the adoption phase and what industry you're in, your imagination of where it can go. So I wouldn't if that's the path that goes on, well, then maybe that's the UBI is what comes out of it. But I would not expect a program like that. It would end up being very reactionary to, like, that scenario would have to take
Oh
shape
yeah.
first.
It would not be.
And I don't, but yes, that's not, and I think this there's, I mean, obviously there's more and more attention to AI, the broader impacts, the potential impacts on the economy, on workers, on society. You still see narratives that are on both sides of this. And so I think it's just going to be how this technology rolls out and the clarity of it. But, major technology shifts often do come with big policy changes as well too. Now, whether we can quote unquote afford a UBI, whether this kind of big government program is the actual answer that comes out to it, I don't know. But if the world changes that fundamentally, then policy could change that fundamentally too.
Yeah,
I will admit,
when I say UBI, I just mean some big change like that. I'm not saying UBI.
I will very much admit, Ophir, to being a skeptic of your position in my views of both the limitations of current language models as well as the credence I place in the things that are coming out of OpenAI.
Well, how about what already exists?
I am very impressed with what exists for very specific limited applications. And I think that what we have seen is sort of like this asymptotic curve of improvements where we're reaching the limits of this type of approach. And sure, like I've been reading a lot about how reinforcement learning can shift the capabilities of language models, and that's the great hope. But I also think that deep learning, which is sort of the fundamental basis of a lot of these technologies, is quite limited, and that we haven't found the answer that will get us to the place that you're thinking of. So to me, and I shouldn't even, I think eventually you're probably right and we get there, but that eventually, I don't know what that time scale is, and I don't think it's what Sam Altman wants us to think it is.
Yeah. So I would say this: with what already exists, let's pretend nothing else is coming out. Which is there will be, but let's just actually be tangible. Which with whatever. Do you use O1 Pro, for example?
I use Claude 3.5.
Okay. So the difference between O1 Pro, which is the $200 a month product that ChatGPT has, from 4.0, which was $20 a month, from 3.5, which is free. It's just on more difficult coding problems, people like to put like a measurement, like, oh, it's 10x better, it's 100x better. It's infinitely better, and the reason it's infinitely better is because 4.0 can't do it, and O1 can. O1 Pro. So you can't. It's like dividing by zero. You can't. How much better is it? It made something that wasn't possible. I took a project that I wanted to do with 4.0, and I tried, and I was relieved that I couldn't do it in 4.0. Relieved. I was like, thank God.
There's still a place for me.
No, completely. I was like, oh, thank God. Right? It was like, we we don't just use ChatGPT, but it doesn't matter. Let's just stick with it. So it was like, okay, it's pervasive through the company. But honestly, I was like, oh, thank God. And then O1 came out before O1 Pro, and I was like, whew, that's pretty close. I was like, nah, And then 01 Pro came out, and it just, me and my CTO both were like, yeah, shit. Like now it is. And I have very specific problems that it could not solve that it can solve now. And it solves them relatively quickly. Like, what would take 2 weeks, maybe takes 5 hours. And honestly, the solutions are better than I could have come up with.
And that's better. And honestly, like, I have no trouble believing that. And I think that this is the kind of technology that is excellent at coding and math. And
it sucks. It sucks at math.
Okay, so I don't know about 01 Pro.
It's terrible math. Yeah, terrible.
I know that some of the other models seem to be very good at like abstract and complex math problems. And I have also no trouble believing that, if you have this particular problem, this model is the one to use, and vice versa on a different type of problem. Sure. But I think that's, there are things that it's so good at. And like conversation is another one of those, right? Like it's very good at essentially auto completing in a conversation and sounding really, like it understands what it's talking about when it doesn't actually have like this world, concept. It just sort of can auto complete really well. And I think it at least so far, to me, it's good at making us think it's way better than it is. And that's why I tend not to go for the hyperbole. But I haven't used 01 Pro.
It's a completely it's
now I'm gonna go use it and check it out.
It's like 100,000x better. No, because all of the things that 4.0 couldn't do, you're like, I knew it. You're like, oh no. Honestly, my heart sank when I saw 01 Pro, and then I got cranking. But like it was. I was despondent, as were the tech guys in my company. It was like, oh shit.
Yeah, well, that's what tech guys they're facing, extinction maybe.
It's like, well, I mean, what does an editor do?
Yeah.
What does an editor do? What does an editor at Bloomberg do? What if my editor knew all 1.7 million articles ever written on this subject only by people who are in PhDs in the state of California in the morning on a Monday? When inflation was over 2% and the Fed funds rate was over 4.5%. What do I need an editor for? I would go so far as to say an editor holds me back. Too long, too many mistakes. Too long, too many mistakes. Don't have time for it. I don't want it done in an hour. I want it done in 5 to 15 seconds.
Certainly from a coding perspective, that's my exact experience with it. I'd rather have it working for me than, a lot of coders that I've worked with.
It does that with writing. It does that with with law, almost any subject. I've put it to a lot of tests. So anyway, we'll see. I don't really want to be right on this, just to be clear. I don't want dystopia at all. I want it to be a productivity gain. And I tell you very honestly, when 4.0 couldn't do the problems that I wanted it to solve, I was relieved.
We should have had this podcast sponsored by OpenAI. What are we doing here?
That's right. It's not. I just use OpenAI because people have used that product. It's other ones too.
Yeah, I tend to prefer Perplexity because it doesn't really hallucinate like the others do.
Perplexity makes a lot of mistakes. Just so you know. So for example, if you ask Perplexity, very simple question. Ask Perplexity. Let's say half of the cars in the world go EV. How much reduction in oil is there, right? And Perplexity will say 35%. And then you say, yeah, except have you considered that it takes 500,000 pounds of essentially mining to make 1,000 pound battery? And Perplexity says, oh, that's true. I said, those usually run on like Caterpillars. Those are like gas. So, oh, that's true. There would be a 20 to 25% reduction in oil. So you say, yeah, but have you considered that the average car, like in America in particular, like we don't drive our cars very long, right? We're just consumers. We're awesome. We just buy stuff all the time, right? So you ask it, what is your assumption for the usage of this is based on a 20-year usage of a car. It's like, well, what is the usage of a car? The average car in the United States is 11.2 years old. Okay, well then do that. Perplexity gets to the 10% number, which it is, but not without informing it. ChatGPT 01, it doesn't. It tells you why it's 10%. It says it would look like 35%, but down, right? So I think Perplexity is weak. if you're really, really trying to find answers. It will give you an answer which sounds good. It will be wrong. Or how about this? It will be something that a freshman in college would give you. And we're not, no one is using this to get a freshman in college. We just aren't. Let's be honest. We're doing this to get PhD level stuff, right?
So Claudia, are you using AI yet? Is it having that kind of impact on your daily life?
Not as extensively. So I don't have, certainly. So no, I would not say it's having a great impact on my daily life or on my work life either. But yeah, I've tried it. I've worked with a colleague in doing some coding with it, and so I can see the merits of it. But it's not been a game changer for me yet. But maybe inspired from this conversation, it'll solve all my problems.
Yeah, I was on someone asked me, they came to me for advice for their children. Said, what do you think? My child they're 14 and they're getting high school and they're getting good to college. Like, what do you think they should study? And I said, it doesn't really matter, but starting right now, you should force them, or they should force themselves to use AI at least 2 hours a day. It's part of homework. So by the time they're ready to go to college, they are wholly knowledgeable about what it can't do and what the changes have been. And then you make a decision for yourself. But don't let it be that you didn't use it, so you didn't know, because the world doesn't care. The world doesn't care.
My kids love it. I'll give you that. It unleashes creativity in such interesting ways, right?
Yeah.
It lets them create things so quickly and easily.
Yeah.
I'm a big. It's not that I don't want this to come off as not being a big fan or believing in the disruption. I just, I don't know. Maybe because Sam Altman says it, I recoil from it. But
yeah. Also, I mean, you guys have to allow for the single possibility. I'm just wrong. Of course, I can be wrong.
Is this possible?
Yeah, I mean, I'm like, I could be wrong. Right? Maybe in my little world, it's unbelievable. But like, okay, good. In that little world, good for you. So.
Yeah, we're getting a lot of comments in the chat here. And
I mean,
we've got a few fans here.
What it's done for
AI.
my company, at least, which is, we're a financial technology company. We're not Boeing. I don't know, like it. How about this? I don't know if anybody knows this, but NVIDIA hasn't designed a chip on their own in 4 years. I don't know if anyone knows that. They have their AI running 24 hours a day on massive data sets and massive data centers because they make NVIDIA chips. Their chips are designed by AI.
First dibs, yeah.
They get first dibs on their on their GPUs. That's what I'm trying to tell you. It's the first time where it's not an improvement in efficiency. We're just there are things we can't do anymore that it just does. It does it on its own. So there's just an example. The largest company in the world, their new products don't have any humans. Sorry.
Well, not. They don't have. They have humans. There are some humans, right?
Yes. What I'm saying is the chip designs to iterate on, Hopper to Blackwell, whatever.
Right.
They can't do it anymore. But because of their hardware, the machines can. So I'm not just talking about a small fintech. I'm talking about the largest company in the world, for example, or Salesforce. So, Mark Benioff said he's not hiring.
Personally, being on the editorial board of the Journal of AI and Ethics, I can say that I do not welcome our new AI overlords, and we have not figured out questions of alignment and
no, it's going too fast. I wish we could unplug it.
Too fast.
I wish we could unplug it. I know there's no such thing. But I was like, just turn it off. Turn it off. I'm all for turning it off.
All right. Well, on that note, anything you guys are looking at, let's say in the near term, what do you think? Let me ask you this question: outside of the AI conversation, over the course of this year, looking forward, what do you think is the thing that you're most hopeful about, and what are you most concerned about?
You can go first.
We should finish with Claudia should have the final. I think that's only fair. I'm hopeful. Okay, so the thing I'm most worried about is what we started the conversation with. Like, we're not talking about AI anymore, right? Like, what policies, trade policies, immigration policies, whatever. What kind of irritants are they going to throw into the system? How bad will they be? And I mean, if we're talking about most worried about, does that add to geopolitical strife, which is just a really very fancy way of saying war? Is it going to create more war? right? Even though he's promised less war. Okay, so that concerns me. There's a great unknown in the Oval Office, which could be amazing, or could be terrible, or could be neither of the above. What I'm most hopeful for, again, we're just excluding AI. What I'm most hopeful for is, I mean, there's a good outcome with this new administration, and maybe this is saber rattling, and maybe it does increase productivity, and maybe the fentanyl problem gets better, and maybe, like, I think there's reason to have hope. I think earnings, my forecast for EPS this year are considerably higher than the street. I think I would be the highest on the street. And part of that's because of AI, but the good part. So I think, those are the things I'm most concerned about and most optimistic about, kind of excluding this AI thing.
Okay. Claudia, what do you think?
Yeah, so I think in terms of, the policy wild card for this year, and we talked about it quite a bit in the beginning, I am concerned about the tariffs, particularly the broad-based tariffs. I just, having gone through an inflation shock, through cost shocks that really were complicated and caused a lot of hardship, even thinking about going down that road, I see a lot of concerns with that. But I still don't see that as a base case. I think these are risks. I do think markets will push the administration to do the right thing, which is not much in terms of tariffs. And so, I think that's my base case. The thing in terms of the optimism, the U.S. economy, the labor market, the American consumers have shown incredible resilience through a period of a very difficult past 5 years. The last few years have seen some really remarkable growth, remarkable relative to our peer countries, remarkable to even our pre-pandemic pace. We are in a good place, and that can help weather some maybe not so smart decisions or events globally. We never know what the next shock is coming. And so I see the place where we're starting from inspires a lot of optimism. It doesn't inspire unbridled optimism, right? Like even if we're in a good place, we can only take so much bad. But I think this year will be a continued path back to normal, pre-pandemic, with some, bumps along the road and a pretty, I don't know that we're going to get to enjoy that journey back, right? There's going to be a lot of uncertainty about what's around the next corner, but I think I expect that to be largely pretty good. So.
Yeah, we're in a good place. To take any sort of atom bombs, bad choice of word, but take any roadblocks out that could be caused by weird policies, like, it's, correct me if I'm wrong, that the non-farm payrolls and private non-farm payrolls were the highest in 9 months, right? And wage inflation came down. PPI was cooler. PPI was cooler than we thought. Core PPI came in at 0.
Yeah, that's right.
These are good numbers. The Fed's cut by 100 basis points, and that's less restrictive. That's direct. That's 100 basis points off the prime rate. Directly 100 basis points off the prime rate. That's good news.
All right, so let's end it there on a note of optimism. Thanks again to the both of you. Really enjoyed the conversation. Fascinating as always. Totally different than expected, which is always great. And thanks everyone for tuning in and listening. And we will see you. I don't think we're going to be on next week, but the week after. And we've got a full February coming up. So thanks for joining us.
Great. Thank you.